What's up, guys? This is Carter Thomas with Coin Mastery TV. Welcome. Thank you for joining. Another great day in the cryptocurrency space. We're doing daily updates. We're talking about what's going on with our good friend Bitcoin. We're going to talk a little bit about what happened with ZClassic for anybody involved. Very interesting game theory study that we'll talk about. A little bit about what's going on in the overall market, but I really think I want to talk a little bit more about what's going on with this CircleX acquisition. I think this is a big deal. I think it's a bigger deal than people think it is. Fun piece of news about the CFTC, and then start a discussion about what 2018 winners and losers are going to look like. And this is obviously just what I think, and it's just a different perspective as an entrepreneur, as a person who's been involved in a handful of entrepreneurial emerging markets, and giving you my perspective on this, because I think it actually will be really helpful in relation to what we're seeing in the overall market sentiment. I think it'll help you just see things in a new light that may be helpful to make better decisions. But anyway, welcome. And you'll notice on this first chart here, we have two conflicting lines. If you're listening on the podcast, we have the pink line that we had yesterday, which is the trend line. We also have this new light blue line. Now, there's a lot of questions about this. And man, my hat is off. First, let me say this. My hat is off to anybody who does technical analysis as your full-time thing. And if you put it on YouTube or any sort of public place, man, because you just get torn apart if you do anything that is not completely by the book. So I do want to just qualify this by saying, yesterday I drew this pink line, and that's the trend line I was talking about. So I talked about the video. Hey, we broke this trend line. That purple line, if you notice, we're drawing it from the top on the daily chart here, and it touches the candle right around January 7th. And then it broke through briefly on the 20th, and then yesterday, we're on the daily, so I'm going to go to a 4-hour. We did break through, and you can see that this 4-hour candle, that was a clear breakthrough, I should say, of this particular line. But there's a lot of people that we're looking at this trend line and it's saying, dude, that's not right. That's BS. And there's something to that. And so if you don't know much about charts, when you do logarithmic, it makes all of the changes the same size. So if you go from $1 to $10, that's a 10x change. If you go from 10 to 100, that's also a 10x change. So, but if you go in logarithmic, those are viewed as the same size. If you don't go logarithmic, one is 10 times bigger than the other one. So logarithmic is a good way to measure against long-term trends. So most of the time, when you're doing long-term trends, you should do logarithmic, which is why when you click log scale, you can see that the blue line goes from the top and touches that same exact peak on the 7th, but it's a much higher trend line. And that's when you look at that, it has not crossed that trend line yet. So many people would say that the log scale is that's the gold standard. That's usually what we do on this channel, but that's not what I did. I didn't do that yesterday. So that's what it was. Right or wrong, that's just how it went. So I'm just going to use the log scale just to keep it, keep it consistent moving forward. I'm not going to mess with this. Feel the wrath of the masses here. But anyway, I just wanted to clarify that just so that whatever. Anyway, that being said, you can see that there is still some room on this trend line. It becomes less important. We're not quite as close. We are also seeing a little bit of a pullback after having this particular breakout through whatever wasn't the previous trend line. There's something to be said for a reverse or inverse head and shoulders here. The neckline being up top. But what I'm really interested in is looking at the retracement of this. So let me pull this up. Just loosely going from the bottom of this run to the top very quickly. And you can see that we are, the 38 line held some decent support, as you'd expect from the previous resistance over here. But also, more importantly, is like right now, we are at this 10,300, it's called 10,380, give or take. And you're starting to see some new support. Now, this is not necessarily a huge support line. It does show some resistance from this particular trend that's happening right now, meaning what you really care about. We want to see this level hold in order to keep the momentum going on this trend. So, right, so we went from 6,000 up to, call it 11,800. We dropped back down to 9,400, and now we moved back up last day and a half, a couple days, I should say, to 10 or to around 11,000. We're coming back down to this 10,400 level. That is the previous resistance from the 23rd of February. We really want this to hold itself so that we can keep moving up. If it breaks through this, we start to get into a bigger retracement. Maybe we go down all the way back down to 8,800, down to the 50% fib or something like that. But this is a big, important level. And if you take that fib out of there and you start to go and just do straight, just straight resistance levels, and then you do some support levels here, you can see how they kind of work themselves out already on the charts. Let me make sure I get that right there, where this is just previous resistance and support. So you get the resistance over here for the top and the local all-time high, or local high on the 20th. Similarly, big support here on the 17th and then on the 25th. Anything in this channel is really no man's land. I mean, it can bounce up and down through here for a while. Nobody really knows. Now, if it holds this local support, that's great. It'll probably stay at the top part of this channel, and maybe it'll poke through. Once it gets above that trend line, we're in business. That's going to be a very good day. We're going to definitely drinking a Red Bull on TV or on the show when we do that. But it's very hard to make a long-term or a trend-driven decision while we're in here. So I'm not going to do anything personally. I'm just going to sit back and wait and see which one of these lines it breaks through next. And that's just I wouldn't even say the safest bet. It's just it's the highest probability bet, and that's the best you can do. And it's important to always remind myself that doing nothing is a decision. It's really important that you don't want to be doing something every single day, other than making an analysis. And again, I would encourage people, go check out other people's channels. Go look at go to tradingview.com, look at other charts, and see what other people are looking at. Because I do my thing. I look at one set of criteria. Other people look at Elliott waves. Other people look at head and shoulders or inverse head and shoulders. Or some people do things differently. And it's really important to get different perspectives, because I'm going to be looking at different levels than they will be. And they're going to be right sometimes. I'm going to be right sometimes. It's just good. It's good for you, and it's good for your decisions. It's good for just making sure that you stay in control of your destiny. Now, speaking of staying in control, let's talk about something that was pretty out of control. ZClassic, our good friend. Now, ZClassic, excuse me, I have this cough, it just won't go away. Anyway, if you have not been following ZClassic, whatever, long story short, they announced that they're going to be doing Bitcoin private fork, one-to-one snapshot for anybody who owns ZClassic. And like a 0.01 snapshot for every Bitcoin someone owns. Now, when they released this, you can see there's this massive run-up back in the end of 2017. And all of this chop for the last month and a half has really been just game theory. It is just a questioning what is everyone else going to do, and how do I max my return before everybody else does the other thing, right? This classic game theory. If If you ever want to learn more about this, you should go to coinmastery.com/store. That takes you to my Amazon like bookstore, and I always upload new books. Nassim Taleb is really the master at game theory as it relates to economics. He can point you in the right direction. There's a bunch of great books. It's Fooled by Randomness, one of the best. Anyway, as we approach the fork itself, which just happened, there was a bunch of controversy around it, specifically around Bittrex not recognizing the fork, and they were by far the biggest exchange trading it. And so there's a lot of people saying like, oh crap, what do I do? And then they came out and said, there's so much, the wallet can't handle this many withdrawals. We're gonna have to shut it down right before the fork, and it'll be frozen for a specific amount of time, and then we'll reopen it. And so you could see that there was just this massive sell-off that happened right after the snapshot happened. And guess what? This is exactly what happened on pretty much every fork. And some people were saying, oh, this wasn't, it's going to be worth more to hold on to it and blah, blah, blah. Because, if you hold on to it and you don't sell it, in the Bitcoin private actually becomes worth more than the amount that it fell, or the price that it comes back to. You made the right call. So it's just, nobody knows. It's a complete gamble, and there's a new market that's going to decide that. But I think that this is a really good indication of the kind of opportunities that come along in crypto. And I'll get to this over the next few days. I want to talk more about these kind of how the market's going to evolve for you guys, for micro, on the micro level, microeconomics being individual decisions. That's what micro is. Macro is institutional systems, how they work. Micro is individual decisions. Because the microeconomics of crypto is going to become, there's going to be more and more stuff like this that happens. Game theory type of opportunities where in 2017, you could really get away with a lot more because eventually it would just all work itself out in a huge bull run. In 2018, there's going to be real repercussions if you don't get it right. And I don't even know if I would say it's 50-50. It's almost less than that because you're really going to psych yourself out in many ways. Meaning, in the future, as you see these situations where you're trying to play when you're trying to play a game, or you're trying to play your cards so that you win in a greater fool situation. If you are going to do something like that, you have to make it mathematical. Meaning, if you decided that you wanted to get in on January 24th, whatever, I'm making this up, and you got in at, call it 0.0098 Satoshis. That's what you got in at. And you need to write down on a spreadsheet or on a piece of paper when you would sell, like what the gain you would sell would be, and you need to write down when you're going to exit, what sort of loss you would need to see. And you need to follow that no matter what. You cannot be emotional about it. Now, the problem is in situations where there's a huge flash crash like this, stop losses don't always fill. Usually they do, but sometimes they don't. But you have to stay extremely disciplined about this, and you have to almost outsource it into something that will trade on your behalf, like whether it be a stop loss or at least a spreadsheet, because otherwise you're going to think you're a genius and you're making all this money, or you might get ripped off, and sometimes you're going to be right, but sometimes you're going to be wrong. And the thing about these game theory situations is that when you're right, you're usually right pretty well, but when you're wrong, you're extremely wrong. So the risk reward on game theory is usually not that good unless you are controlling the situation, unless it's not a game for you. So if you controlled, 6,000 Bitcoin worth of ZCL, that's a different story. That's no longer game theory. That's like manipulation. That's a different model, different mental model. So anyway, I think that's just a good takeaway for anybody who did this. It's not bad. It's not good. It just is what it is. And you are going to see more and more stuff like this. I mean, ICOs in many ways are kind of like this at the launch, right? Like when it hits an exchange, there's a bit of a game theory that goes on, which is why you really want to often let it settle down, and then you allow the market to do its thing. That's why you invest in great products, and you don't invest in great teams and whatever. But I think that's a really good takeaway from stuff like this. If anybody's been listening and watching from the early days, I told a long story, and I won't get into it now, but the story is basically some of the best advice you'll ever get is control your environment. Control as much as you can in your life. Control as much as you can in crypto. Seems like it might not be in your control, but you'd be surprised at how much you actually can control when you set limits and when you control your expectations. When you give up the moon idea and you settle for 20%, you get a lot more control. So it goes. We'll see how this unfolds, and we'll also see what happens when Bittrex unlocks their wallets. Again, I didn't participate in this. I don't own any ZCL, and so it goes. But game theory is tantalizing because it seems like there's a way to win, but it seems like there's a way to put reason to the chaos when in reality it is gambling, and that's an important distinction to make in markets. Let's refresh this, get our newest data. I was going to switch over to BTC because that's what we're going for here. And there's not a whole lot to tell. We're just seeing these altcoins just continue to kind of stagnate, up, down, drop here and there. I think the thing that's most interesting to me is this dominance number. It just keeps going back up, right? We're almost back up to 40%, and you're seeing it start to make a move. Now, the last time we saw this happen was back here in June, when it started to make its way up. Now, you guys know that I think that it's going to have its dominance, but as these new exchanges and fiat on-ramps come, things could definitely change with Bitcoin. I think that new money could start going directly into new coins. That could really change Bitcoin's dominance. We'll see how that plays out, but this is as long as this trend line is going up, which it has been and probably will continue to do for a while, it's a good idea to own Bitcoin. Guess what happened last time Bitcoin dominance went up? Bitcoin crushed everything else in Satoshi value. Guess what's happening right now? It's going up again. Until that stops going up for a sustained period of time, it's not a bad idea to own Bitcoin. Like, have that be a bigger percentage, especially if you're all in altcoins. It's not boring to own Bitcoin. It's actually a very powerful position as it's gaining dominance. So we'll leave it at that. I don't think there's a whole lot of really interesting things, at least in terms of what you guys can do about it. Daily reminder, this is not professional advice. I'm not a financial advisor. Just want to put that out there. All just my opinion. But keeping that in mind, the dominance, I think, this is telling you guys, don't forget about Bitcoin. Don't get hung up on it's alt season. Alt season is going to come. I can't wait for it. I'm going to get that 10x. It's going to be last, winter again, last November, December again. Play the cards that you're dealt right now. Look at what is happening now, not what you hope is going to happen in the future. Anyway, so going back to what happened yesterday, Circle acquiring Poloniex. Circle. If you haven't checked this out, go check it out. It's an interesting. There's a lot of backstory behind it with Goldman Sachs, who is a Series C investor, maybe even Series D, a digital currency group, Series B investor. A lot of different investors in Circle. But what's really interesting, and I didn't know a lot of this. As I dove in to this article, but also been reading up on this stuff. Circle's vision for what they're going to take with Poloniex is to combine everything. So right now, we've got altcoin exchange. We put it this way. We got over here on the far side, we've got your, E-Trades, Charles Schwab account, Fidelity, TD Ameritrade, eToro. eToro is kind of in a gray area because they have crypto, but equities, trading desks. In the middle, we have the Robinhoods, the eToros, where they have equities and they have a little bit where you can kind of dip your toe into crypto, but you don't actually own the crypto. So you get the rights to the crypto. It's kind of whatever it is. Now, in the crypto world, we have two buckets. We have the fiat on-ramps. We have the Geminis. We have the Coinbases. We have, the other ones where you can deposit money, Bitstamp and Bithumb. I mean, all the ones globally. Kraken, maybe, but the Kraken might be taking on USD, by the way. And then you have the altcoin exchanges. We have the Binance, the Bittrex, the KuCoins, all the other ones where you can't put money, their fiat in, but you can put Bitcoin in and buy altcoins. So there's a little bit of it's a pretty fractured market. There's no one-stop shop where you can go between all of these classes very easily and seamlessly. This is what Circle wants to do. All right, so I think they're calling it CircleX. Yeah, CircleX. And so with CircleX, you can go from, let's call it fiat, and you can open up your new CircleX trading platform, and you'll be able to buy Apple stock. You'll be able to buy 0x token. You'll be able to buy futures. You'll be able to buy an option. Like, you can buy everything, like any security that's ever out there on any market, and they can all be traded, dispersed, and you can have a big portfolio. This is super interesting. One, from a liquidity standpoint, but two, from a custodial standpoint, right? I mean, you could start to, everyone's like, don't leave your money on the exchanges. I still believe that in many ways with crypto, but this could help mitigate those factors if there's some level of insurance and whatever else it may be, depending on how they interact with private keys and things like that. But this is a really big deal. This is the kind of thing that we talked about last fall when we're talking about, like, how do we get the masses involved? This is the kind of thing that needs to happen. So many people know about Bitcoin and cryptocurrency, but very few people actually sign up and buy it. And even smaller amount actually go out to, like, move it over to an altcoin and buy an altcoin. You get something like a CircleX where you can go in and you can buy everything, and it's a very easy thing. It's press a button. Okay, now I own a token, just like I own stock, whatever. That is a huge deal for the overall ecosystem, for the overall acquisition of assets. Also, really interestingly, this opens up the ability for index funds to start to including cryptocurrency, right? ETFs or index, whatever they decide to use, can start to include this stuff because it'll all be under the same umbrella. Now, from a regulatory standpoint, I don't know if you guys saw this. I'm assuming this is legit. I don't know. It seems kind of weird that this guy, Nathaniel Popper, I don't know who this is. I guess he's a writer for the New York Times. And I don't know if this is whatever, but he's like, I just got this slide from a confidential Circle presentation. I don't know why he's posting a confidential presentation online. But anyway, it explains the acquisition of Poloniex better than anything. What this is saying is that Poloniex and Circle went to the SEC, and the SEC said, look, if you buy this thing and you follow the plan that you have, we're not going to regulate what you have. We're not going to come in and tear down apply all these securities laws because we know you're following the rules of the law according to their business model. So that's a really big deal, meaning the SEC will be much more friendly if crypto gets absorbed into already compliant situations, right? These guys have raised 5 years, 140 million in VC. They've spent so much time, so much energy creating a compliance platform. You roll up crypto into that, the SEC likes that a lot more. That's a really big deal, right? That's a proof, that's a precedent. That proves a model, as opposed to a self-standing exchange that tries to win that battle on its own. So you look at something like Bittrex. Well, I have no idea what's going to happen with anything, but something like Bittrex or even Coinbase to a certain extent, that could get rolled up into something else as a way to bypass or at least get on the fast lane to compliance. I have no idea if any of that's going to happen, but it's been proven by this. I think one of the other interesting things, kind of a side note here, this line in this article says, well, some reports put the acquisition price tag at $400 million. Circle executives did not confirm that number to CoinDesk, explaining that this deal started last spring. Think about that. That's almost a year ago, or 9 months ago, whatever. And it's been in the works, and they've been thinking about this, they've been doing this. We are just now having the conversation about securities and security tokens, and we're just now seeing the SEC and the CFTC testifying. And yet these deals have been a year in the making almost. Think about what that means. And most importantly, what that means is we, as the public, when we hear about this stuff, it's already been in the works for a long time. A lot of conversations, a lot of things happening. And when you start to look around, when you start to look through all your coins, when you start to look through all the institutions, all the things that are being built, you better believe that it's the same timeline, that most of this stuff is already in the works. All the stuff that Novogratz and Galaxy Partners it's already been in the works for 6 or 7, they're already doing it all. We're just now hearing about hey, the security, CFTC, whatever. So it's really interesting, meaning this stuff is going to ramp up faster than you think, which is why I'm super bullish on something like on Bitcoin, but overall the crypto market. And I think it's going to go faster than people believe it will. I think that we're going to see speed and change happening because I think that this is all going to start to happen very quickly. From a platform standpoint, this will be interesting, right? How it actually securitizes tokens, whether they try to become like a T0, which is more of like an exchange, right? A templum, which is more of not necessarily a protocol, but a way to actually securitize different assets, right? So those are kind of two different ideas, but CircleX could become a competitor to that. And then something like Polymath is a protocol that you can wrap around an existing token, but this is all super interesting, and I think that this is what I like to call market gasoline. Lots going to happen. It's going to happen faster than people think. It's going to happen faster than it's ever happened before, and there's going to be a lot of money that comes in as this stuff does happen. All right? I thought this was hilarious. CFTC gives the green light for employees to trade cryptocurrency. Situations like this, I think, are really important to put yourself in the shoes of a CFTC employee. All right? Now, I actually think that I know that there's people that work in the SEC, CFTC, IRS, FINRA, who listen to this podcast, who watch these videos. So first of all, thanks for watching. I appreciate it. Second of all, I think it's really important to imagine what it would be like to be in their position. Okay. So first they said it was apparently in response to numerous inquiries from employees about whether they could do so, but they're still prohibited from crypto's futures, which is what the CFTC regulates, margin trading, and using insider information gleaned from their jobs, the news source says, and they can't participate in regulatory actions involving cryptocurrencies they own due to conflict of interest. So that's it's basically like, yeah, you can trade it, but it's like if you work in the SEC, you can buy securities, but if you know anything about a stock, you can't buy that stock, you can't tell people about that. It's relatively straightforward. But let's just back up for a second. Let's assume there's numerous inquiries. Let's say you walk into your job at the CFTC, and let's say you are an auditor or a lawyer or whatever, accountant. And you're saying, man, I'm really fascinated with crypto. It's all this buzz. I really want to buy some, but we're not allowed to. What's the deal? And let's say you do buy some. Let's say you buy a whole bunch of Stellar Lumens, which I would encourage everybody. No, I'm just kidding. That's not advice. I just own a bunch of Stellar. You would get it. You would start to learn about the tech, hopefully. you would start to watch Coin Mastery, listen to the podcast. I'm just kidding. But you would get into it. You would get the I call it the bug. You'd get into crypto. You start to learn about what's going on. And what's really fascinating about that is that I actually think that a lot of people who work in these regulatory departments are smart, and they do a ton of research, and they're working on really interesting things many, many times. But when it gets to the individual level, when you now own crypto, a lot changes, especially if you are seeing the regulations happening, you're seeing how the markets are evolving, and you are now an owner where you want it to go up, or like you want your investments to do well. By no means do I think anything like manipulative or malicious would ever happen, but I do think that it definitely helps mold the conversations that then will then happen at the meeting, the Monday morning progress report meetings. Like, obviously I can't prove any of this, but that's how things happen, is people are driven by incentives. And when they have different incentives, when they have different inputs, when they're thinking about different things, they will have different conversations. And you put enough people like that together, a lot starts to change, right? The overall energy, the mindset, the direction of things happening. And so I think that this is really, this is great news. And I would encourage anybody, if you do work for one of these regulatory agencies, or if you know anybody who does, like, we are here to help. We want these, like, everybody to learn about what's going on in crypto, to learn about the good stuff, and obviously enforce the people that are the bad actors of it all. But this is such an innovative and incredible technology, and there's so much that can be done that's so good. And we want that positive conversation in the board meetings as it, as it happens. Now, I think it's also funny. Some legal experts are questioning this decision, Bloomberg notes. Angela Watch, an associate law professor, called the decision mind-boggling, saying that the decision could absolutely skew their regulatory decisions. Hey, I agree with Professor Walsh. I think she's probably right, but I think that's a good thing. I mean, it's great. So, but I think that's also there's a responsibility involved, and hopefully we can help with making that. So, good times. Anyway, thought that was cool. So anyway, this is the last piece, and this is not it. This is just a visual for anybody listening. This is kind of like the bell curve where it shows early adopters, the early majority, the public, everyone, that shows that adoption curve. This doesn't really illustrate it. I just wanted to do this to create a visual. I think it's good. I think one thing that we're going to keep, that I want to touch on, especially at the end of these videos, is the sentiment and the opportunity and the shifts that you're going to see in crypto over the next year or two. Many of you know I've been a part of a bunch of different emerging markets, mostly around the internet, right? Some were like started with websites and like SEO and online marketing as a service, doing it for clients. Moved into mobile apps, built a couple thousand mobile apps, saw things with huge amounts of traffic, like online native advertising with Amazon fulfillment. I mean, the list goes on. There's a lot of these, but the app thing was probably the most similar to what we're seeing with cryptocurrency. Like, hey, I got an idea for an app. It's like, hey, I got this ICO. Kind of, similar, whatever. And there's a lot of parallels between who won over the timeline and continues to win in the mobile app business versus who won early on. And the same thing is starting to happen in crypto, but the stakes are a lot higher because there's a much lower barrier to entry. Right? With mobile apps, you actually have to get a team, or you got to build an app, or you got to publish it, market it, monetize. You got to do all this stuff. But in cryptocurrency, like, you got to go to Coinbase and you got to press a few buttons and you're in, and that's it. Maybe you buy a few. Like, there's no There's no skills required other than that. And so we are all going to see a lot of confusion, a lot of maybe not animosity, but a lot of people that like pessimism. And you're going to see people getting pissed off or frustrated that it's not what it used to be, that the easy money doesn't keep coming. And I think that we still do have another big run ahead of us in many ways, but I don't think it's going to be everything's just going to go up again. Like you can throw your money at literally anything and it'll work. And I think that the more people that come in, the more that this happens, the more you and I all need to start thinking about this. What is your competitive edge? How confident are you in all the coins that you own? How confident are you in every single decision you are making? Because I can promise you, the caliber of your decisions is going to need to get better and better and better over the next year or two in order to continue to ride the top of this wave. It is a competition. As much as people don't like it's an unpleasant thought, but it's true. And I've seen this happen many times. And that's why many developers who built Bitcoin are popular, but they don't have a lot of Bitcoin. And there's a reason why people who started some of the earliest coins, who are some of the pioneers in this entire space, are starting to lose. It's not turning out the way they wanted to. It's not the vision that they had. And it's nothing against anybody in particular. It's just that you have to learn to adapt. You have to treat this like a competition, not like a vision that's going to manifest and unfold. You have to create the vision that you want. And so we'll talk more about this, about more like tactics and exactly what happens, the psychology, the game theory, all of the things that go into this. But if nothing else, in the very short term, I would encourage everybody, look through your portfolio. Take some time this weekend, look through every single coin and really prove to yourself that it's still worth holding, or you have a strategy for trading or whatever. Because if you don't do that, you're going to wake up and be like, wait, when is this thing actually going to, why isn't this going up again? Like the market is not going to take care of everything. You have to take care of everything. All right. Now, with that, another day, another video. I hope you all have a terrific, wonderful day. I will see you tomorrow. All right. Peace out.